Hello and welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined once again in the studio by Jean-François of Owczarczak to discuss some of the most traded currency pairs. Jean-François, thank you very much for coming in again.
Thanks for having me, Monica, again.
Now we're going to talk firstly about the dollar against the euro. Tightening bond spreads have not been helping this pair over the start of the trading week. Could you talk us through what the charts are showing us, please?
Sure. I quickly wanted to mention on our Fingraphs website that you have a 7-day free demo. So please pick it up, and if you need any questions, send us an email. And just wanted to expand on that, saying that our partnership with Dukascopy would give you a 14-day trial if you sign up for a Dukascopy demo account. Fantastic.
Hopefully our viewers will take note of that.
There you go. And so then back to our Dukascopy live prices directory and into the dollar rates. And let's have a look at the euro. And I wanted to take a step back on the euro. Basically, we're still here on our investor's view with a weekly chart, a daily chart, and an hourly chart. And last week, reduction in volatility over the last few months has made us go through our corrective targets. And now the daily is pointing to an impulsive target down. It sounds a bit aggressive, but it is corroborated with a downtrend on the weekly. And although the prices towards 113 here sound a bit aggressive, and that we know the 120 is a very important mark, it does highlight the fact that the trend on the euro, on the weekly and on the daily, is still in the negative range. And so in that respect, I mean, we will have to keep on being defensive on the euro. And so at the moment, shorter term, well, you're on an impulsive down move on the weekly, an impulsive down move on the daily, and on a corrective down move on the hourly. And so we would expect that following the spike that we did last week on the euro, we have entered a corrective down situation on the hourly charts, and that it could lead us, and let's do a zoom on the charts, back towards the 130 level or even below it. So for the time being, the investor's view tells us that over the next few weeks we should be defensive on the euro.
It does seem as though the markets still remain jittery. And we're going to look at the Swiss franc, I believe, next. It's not something we've concentrated on so much in our interviews, but if we look at that against the US dollar and how it's performing.
Sure. I mean, we haven't looked very much at it because for a very long time, euro dollar, Swiss franc was pretty much the opposite image. But it's been moving, the cross has been moving quite a lot on euro Swiss. And so it's probably a nice time to have a look at the dollar Swiss chart. So let's go to the symbol list, have a look at the US dollar Swiss, and our investor view, so the long-term view. Well, what we see here is that similarly to what we see on the euro, the dollar is initiated a correction up last week. We've barely made it above the corrective targets, but we did, which means that impulsive targets could be envisaged. They do seem a bit aggressive at the moment, but it defines the trend and a possibility. Now, if we zoom out again and go on to the daily, well, the daily has been correct enough now from early February. It did have quite a big test over the last 3 weeks, but we did reach these corrective up targets. That means that if we could make it back here and maybe above the 196 level, that would confirm what we see on the weekly. So for now, if we look at it just on a simple bull and bear perspective, well, we're on the bull on the weekly, a bull on the daily, although a very early bull, and the hourly is also in a bull and just initiated last week a correction up. A good indicator would be to move above the corrective targets here, and they are around 93.84. So this weakening of the euro, i.e. strengthening of the dollar, which is against the euro and against the Swiss franc, would need to pass these levels, but if they do, there's probably quite a nice move to be anticipated.
So that's a bit of opportunity. Now I think nextly we're going to look at gold. It was obviously very topical, but it's been supported by physical buying after the dip in price sort of last week. But can you talk us through what the charts are saying at the moment in terms of gold? Sure.
So let's go back to the Dukascopy directory, into precious metals and into gold. And we have a look here at the investor's view. So what happened last week is that, if you remember, gold was already a bear on the weekly, but still had corrective targets down. We went through them quite aggressively, which means that we pretty much opened the door towards impulsive down targets. They also seem quite aggressive, but obviously when we go through our corrective targets, there's quite a good chance, not 100% chance, but it's quite a good chance that we at least have to consider these impulsive down targets. And they are quite frightening, as they are another 200 points below for the rosiest scenario, and from the worst scenario about 400 points below. So although we don't expect that over the next weeks, it does open the door to such targets, and so mean that you should be careful on gold over the medium to long term. Now, if we look at the daily, well, last week when I was here, I was saying that the exaggeration was very strong and that we could expect a rebound. The rebound materialized, and we were pretty much in the targets, and the initial impulsive down targets have been done, and hence the current correction up. It seems still quite oversold, although there's still a lot of time left to finish this move, and there's still a possibility to reach an impulsive 2 target. And so it's premature today, hence the bear signal here, to call the end of this move down. And so in this respect, we would probably label this as the possibility to continue into the downtrend, and that the move it's a bit too early to call it to an end. In this respect, it's very important to monitor the correction up that could initiate on the hourly. And as we see even on the hourly, well, we're still in a downtrend. And we're slowly getting back towards stress, meaning the small envelope is hitting against the longer envelope again. Although we did see a lot of exaggeration last week, and we did see a nice intermediate bottom, the envelopes are still heading quite aggressively down. And here we are already in an E2, impulsive 2 target, and it does give us quite a lot of risk still short term. So at the moment, if we look at the investor's view's perspective, which is a view over several quarters, a view over several months, a view over several weeks, we'd think it's too early to be taking a lot of risk on gold, and that it's probably time, given the correction that we've had, to probably book on anyone that's been able to catch this correction up.
Okay, well, lots of highly tuned tips there for our viewers. Thank you very much, Jean-François, once again.
You're welcome.
Thank you. Well, that's all from Jean-François and myself. Don't forget we have hourly updates of all the latest stats, so please do click back to Dukascopy TV. Bye for now.